Okay, we're just going to get right into the GameStop short squeeze and why it could drop even more. Before we get going, please hit the subscribe button and help me make more of these videos for you. And also like it if you enjoyed the video. So, getting right into the short squeeze of GameStop, how it happened and why it could drop even more. First of all, I believe the stock before it even started its huge rise due to the Reddit craze that started this GameStop ride. It was only like about $11 or $12. So with it rising as high as I think it was close to 400 bucks or $483, I believe the 52-week high was. Now it's only $40. Does it have a lot of room to fall? It definitely does, in my opinion. Again, I'm not a financial analyst and don't make any purchases or sales based on my information. This is just strictly for informational purposes. I'm not a financial analyst. So looking at this chart, you can see the rise and fall in the recent weeks of GameStop. So let's get into what is a short squeeze. What is a short squeeze? Okay, a short squeeze is basically when a stock or other asset jumps sharply higher, forcing traders who had bet that its price would fall to buy it in order for it to forestall even greater losses. Their scramble to buy only adds to the upward pressure on the stock's price. Basically, as you see here, short sellers borrow shares of an asset that they believe will drop in price in order to buy them after they fall. If they're right, they return the shares and pocket the difference between the price and when they initiated the short and actual sale price. If they're wrong, they're forced to buy at a higher price and pay the difference between the price they set and its sale price. So short sales have an expiration date, an expiry date. So when a stock unexpectedly rises in price, the short sellers may have to act fast to limit their losses, and that is basically what a short squeeze is. So we'll go to the next slide. Okay, so the initial craze on Reddit for GameStop has come to an end. That meteor rise that it took is something of an anomaly now. In my opinion, it's not going to happen again, especially not for this stock. And now basically the stock is going to be like any other, and it's got to trade on its fundamentals. Right now, brick and mortar retail, not very exciting. I know they have about 5,000 retail outlets across North America. But the stock has been trending downward in each of the last 3 years. I know there's a pandemic out there hurting all retailers, but investors got to look to future gains to evaluate whether or not they'll invest in a growth company, and a growth company being one that doesn't offer a dividend, and people are invested in because they're hoping it will go up in value quite a bit. Right now, not a rosy picture in the future of this stock, GameStop stock. I'm thinking, for me personally, I would not buy this, especially just based on the craze. If you bought when it was going up and you bought it at like 30 or 40 or 60 or $70, and it kept going up, basically you pretty much you got kind of lucky on that one, but you jumped on the bandwagon, and good for you if you made a lot of money. But a lot of people also lost money in a very short period of time. So no real good came out of this, especially for the people that lost. But for the guys that did win, very, very lucky. Personally, I stay away from stuff like this. But people now also are looking to cut their losses. So people that have bought in at $100 or $200, they're seeing the stock trading at 40, 50, 60 bucks. They're thinking, okay, I might as well take what I can get before this possibly goes back down to 10 or 12 or $15 where it was before all this happened. So right now, not a lot of upcoming exciting milestones either to make people want to get back in. So next slide. Okay, so the competition in this sector is fierce. Obviously, while gaming overall is widely expected to be a strong growth market over the next 5 years, many market research firms expect growth in the console market to be weaker due to the competition from non-console areas such as the mobile, cloud, esports, and even PC games. So all areas where it's harder for GameStop to compete. So the competition is very fierce. So just lending to the possible downside of this stock and a lot of downward pressure on this stock. And I think there's still a lot of shorters in the stock. I believe the short ratio is like 42% of this stock is shorted. So I could be wrong. Again, I'm not a financial analyst, so don't take these figures as gospel. They're just my opinion and what I've done in my research. So to conclude, the GameStop stock, I wouldn't touch it. I wouldn't have bought it even when it was going up. Even though it was possible to make money, but that's all in hindsight now. So I stay away from these things, and I strictly focus on biopharmaceuticals. But a lot of people ask me about this, so I wanted to post a video. So hope this helps, and thanks again, and we'll be making some more videos on biopharmaceutical stocks in the very short future. Thank you.